If you've watched any of my recent videos, you've turned on the television, or just perhaps perused the internet, you've likely heard that interest rates are finally coming down. You've also likely heard about the impact that that's expected to have on the housing market. Well, in this video, we're going to talk about the steps that you should take to set yourself up for success as a home buyer in an increasingly competitive real estate market. And we're going to get started right now. Hey, if this is your first time to the channel, we encourage you to like, subscribe, and hit the bell for notifications so you can keep up on all the content that we're releasing about Bellingham, about Whatcom County, and all the great things that are going on here in this area. My name is Jeff Engen. I'm with MJB Real Estate Group here in Bellingham, and every day we get calls, texts, and emails from people just like you who are considering a move to this area, and we absolutely love it. So whether you're thinking about moving tomorrow, 10 months from now, sometime in between, we encourage you to reach out. All of our contact information can be found below, and we are standing by and ready to help you in any way that we can. But for now, let's talk about setting yourself up for success as a home buyer in this upcoming real estate market. As we dive into talking about this subject, it's important that we provide just a brief recap of the state of the market as we end 2023 and move into 2024. Now, I'm not going to go into this in detail. I've recently done a couple other videos. You can check them out here to provide a little bit more context about this transitioning market. But what's important for you to know is that interest rates are coming down. Not only have they come down more than 1%, closer to 1.5% since October of 2023, but the Fed has reported that they plan and anticipate continued rate decreases over the course of 2024. That means that many home buyers who had taken a break from their home search because of increasing interest rates will re-enter the market. It also means that there's going to be a lot of first-time home buyers that are coming to the market. And so we anticipate as rates come down, the number of buyers in the market will increase. Supply of available homes, inventory of homes, is phenomenally low at this point. Now, part of that is seasonality. We've kind of just gone through the holiday season where a lot of people are not putting homes on the market because they're focused in other areas. But a lot of that also has to do with the fact that home sellers had refinanced when rates were low, and they've been reluctant to list their homes and trade their 2.5–3% interest rate for a 7.5% interest rate if they sell and then buy something new. So as rates come down, more sellers will continue to enter the market as well, but there is expected to be a disparity, supply and demand, of more buyers than there are homes available. And the impact that that's going to have on the market is simple. It's going to cause there to be a lot of competition for the same homes. And when there's competition for homes, we start to see people approach the purchase of a home in a different way, and we're going to talk about some of those things here. So the first thing that you must do as you set out your search for your home is to connect with a real estate professional. Now, what do I mean by professional? Well, I mean someone who sells real estate day in, day out. It's their full-time endeavor. It's their full-time focus. This is not a side hustle. This is not a hobby. This is not someone who got licensed just weeks or months ago. This is not someone who practices real estate in an area outside of yours. They might be an expert in their respective area, but I wouldn't engage a Seattle-based agent to help with a Bellingham home purchase, just as I would not operate as a Bellingham expert in real estate and advise you on a Seattle home purchase. So you want to find someone who lives and breathes real estate in the respective area that you are searching, and you want to make sure that they're going to be able to advise, support, encourage, educate, and very importantly, to be able to negotiate on your behalf to get you a home under the most favorable circumstances possible. So step number one, connect with your real estate agent. Step number two, and sometimes this comes before step number one, but for our example today, step number two is getting pre-qualified. Now, the process of getting pre-qualified is effectively connecting with a lender, evaluating your financial circumstance. This includes things like your income, your debts, your type and length of employment, to figure out what you qualify for in terms of a home. Now, in some cases, you may not qualify for what you were hoping to in terms of the type of home that you want to pursue. In other cases, you might qualify for far more than you want in terms of a monthly mortgage payment. And so it's important to have these conversations before actively getting out and searching for homes, that we're setting realistic expectations around the type of home and the price range that we're searching in. If you don't have a lender that you're connected with, reach out. I'm happy to help connect you with somebody here in the area. I've got any number of great lenders to connect you with that provide great rates, great service, great support, and great education to take you all the way from that pre-approval process to closing. Now, people will sometimes ask, well, when should I get pre-approved? Well, pre-approvals are good for 90 days, after which point in time they technically expire, but all that needs to be done is another refresh of your credit report by your lender to have you back active again in that pre-approval status. So if you think that you're going to be searching for and prospectively writing an offer on a home sometime in the next 90 days, now's the time to get pre-approved. If you think that you're 6 months out, 12 months out, something to that effect, I would still encourage you to connect with a lender, have a conversation about your goals, about your current financial circumstance, and just get a ballpark idea of what affordability is going to look like. But we want to be pre-approved. A pre-approval letter is a prerequisite, is something that we include with an offer when we submit it. And so we don't want to be scrambling at the last minute to try and get you pre-approved when you found the home of your dreams, but we've not yet cleared that hurdle. It's important that we do that ahead of time. All right, so we've all heard the phrase knowledge is power, and perhaps could not be more true than in this endeavor of pursuing a real estate purchase in an increasingly competitive environment. Now, if you're working with me, my goal is to get you as educated as possible, to provide you with as much knowledge of the market as possible, and also to help you understand the real estate contract as much as possible well in advance of the time that we're actually writing an offer on a home. You need to understand and have clear expectations around what it is that's going to be happening as we're touring homes. What are our strengths? What are our weaknesses in comparison to our peers who might be searching for a home alongside of us? Again, the last thing that we want to do is find the perfect home and then be scrambling to craft a competitive offer without you having a clear expectation on what that offer might look like, what the real estate contract looks like, what the addendums are that we're going to employ, talking about contingencies, for example. So it's really, really important that you sit down with your agent, you have a clear expectation and a clear understanding of the market so that you can align your expectations with reality and set yourself up for success as you go out and search for your home. So one of the things that we've not yet touched on that you may think goes without saying needs still in fact to be said, and that is that we need to get granular and we need to get specific about the criteria for your home search. So there's going to be things that are non-negotiable. Perhaps that's number of bedrooms, number of bathrooms, square footage of the home, particular neighborhoods and location, proximity to certain amenities. Those are things that you may not have a lot of flexibility in. And so we want to get granular and we want to know the type of property that we're looking for. At the same time, in an increasingly competitive market with low inventory and not a lot of options to choose from, it's also important that we be as flexible as we can with our home search. And so, going back to the example of bedrooms, maybe you need a 4-bedroom home, and we're not finding that, but we could find a 3-bedroom home that happens to have a bonus room, an office, that may be able to be used for your purposes as that 4th bedroom. So we need to be open to homes that are maybe slightly outside of our criteria. Another big thing that we come across is neighborhoods. People get really fixated on a particular neighborhood and, hey, we're only looking in this area. And meanwhile, the perfect home, the home that checks all your boxes, is just down the street in technically a different neighborhood. So those are things that you want to keep in mind. A conversation that I often have with people who have built homes is that, they build the home, they've gone through this year-long, 2-year-long process of creating this home that they've designed, they've chosen, and then they take you on a tour of the home and they show you a particular thing. And they say, yeah, we really wish we would have done this way, or we would have put this here. And so the idea behind that is that if you can't actually build the perfect home, you're probably going to be pretty challenged to find the perfect home. And so having that flexibility will go a long ways in making sure that you find a home and are able to get under contract on that home as quickly as possible, as close to your predefined criteria as possible. But again, we want to be as flexible as possible because inventory is low. So another really important component of success in a competitive real estate market is speed. So we've gone through the process of getting pre-approved. We've gone through the process of being educated on the market and real estate contracts. We've gone through the process of setting the criteria for the type of home that we're looking for. And now we're actively out and searching for homes. Well, you're going to know with a high degree of confidence when you walk into the right home. You just know. It's one of those things that you really can't explain to someone until they've experienced it. But you're out looking for a home, you walk in the home, and there's just this feeling, this is the home. There's a lot of times in real estate, especially for first-time buyers, where people aren't really sure what to do with that. They think, well, I think this is the one, but I don't know, we should maybe look at a couple more, or maybe we should think about it for a day or two. Well, in a competitive real estate market, real estate favors speed. And so when you find the home that you can say checks all the boxes, and you can just have this gut feeling, if you will, that this is the home, we need to move on it right away. Now, we're going to talk about contingencies here in a moment, a way to protect yourself that if something comes up unexpected, circumstances change, what have you, but the real estate market, especially when competitive, favors speed, and you need to be ready. That's why we do all this work beforehand, to get you educated, comfortable, set expectations, etc., to be able to move quickly. So now we're at a point, we found this home that you want to pursue, and now it's time to craft an offer. Now, there's kind of two circumstances in which we will be crafting an offer. One is that offers are being reviewed as they're received, and we're connecting with the listing agent. Hey, do you have any other offers? Are you anticipating any other offers? If they say no, then we're simply crafting an offer with the expectation that there's no competition in submitting that offer. Another circumstance we might find ourselves in is submitting an offer for what's known as an offer review. Now, the way back in post-COVID, kind of 2020, 2021, that homes were listed, most commonly was that homes would come on the market on either a Wednesday or a Thursday, and then there would be an offer review on the following Monday or Tuesday. So that means the home gets listed, there's time for buyer's agents to show the property, perhaps they host an open house, and they're letting everyone know, we're not going to look at offers until noon on Monday. And if you're interested, we ask you to submit your offer then. Well, in that sort of a circumstance, particularly in a competitive market, we're anticipating that there are going to be other offers that come in alongside of ours. And in that situation, we're crafting an offer that's very different than the one that we might submit when there are no competing offers. Things like contingencies, things like price escalations are now a big part of the conversation and setting you up for success in getting the home that you're after. And so we're going to talk a little bit about contingencies. Contingencies can basically be thought of as requirements of the contract or exceptions to the contract. So we're going to make this offer on a home, but these certain criteria, these certain things need to be met. Now, there's a number of contingencies associated with a Washington State real estate contract. For today's purposes, we're really going to focus on two. That is number one, your home inspection contingency, and number two, if you're financing your purchase, your financial contingency. So starting on the inspection. Inspection contingency typically provides you the opportunity within a certain number of days of going under contract to have a third-party home inspector evaluate the property. They're going to go through top to bottom, roof to foundation, everything in between, evaluate the plumbing, the electrical, the structural integrity, the appliances of the home, and they're going to give you a full written report with photos to help you understand any flaws, defaults, necessary repairs, or maintenance items that you might expect with this home. And as a part of your inspection contingency, if there's anything that is not to your satisfaction in that inspection, you are able to terminate the contract. Your earnest funds, which you can think of as effectively an early deposit towards your purchase, are returned to you, and there is no consequence. If there are items that need to be negotiated, we have conversation with the seller. Hey, we'd like you to fix items A, B, and C. They may do it, they may not, but the goal is to come to a satisfactory resolution with regards to inspection. And if you can't do that, again, your earnest funds are protected. You're going to get your money back. Your financial contingency is twofold. Number one, it protects you in the instance that the home does not appraise at or above the purchase price. And so what that effectively would look like is you go under contract on a home at $600,000. Your bank orders an appraisal to ensure that the value of the home and effectively that the loan is sound for them to make. And that appraisal comes back at $575,000. Well, in that situation, you could terminate the contract on the basis of low appraisal. More commonly than that, we would go to the seller and say, hey, we've had a low appraisal, we'd like you to match that value. And again, we're in a conversation. They may do it, they may not. There's a number of solutions that we could pursue in that scenario. Another important thing about your financial contingency is it also says that if for some reason, to no fault of your own, the lender is unable to fund this loan, let's say that you unexpectedly get laid off from a job and at the tail end of a transaction, and the bank learns about that and effectively says, hey, we're not able to fund this loan based on this change of circumstance with employment, well then again, your earnest funds are protected, you can terminate the contract. Now, when we get into increasingly competitive scenarios, buyers start to waive their contingencies as a way to preferentiate their offer, to make it stand out against competing offers. So As an example, going back to our inspection contingency, a lot of people feel uncomfortable buying a home without an inspection. Generally, I'm a big proponent of inspections. I think that they're valuable. I think that they're helpful. I think that they protect you as you are setting out to make a large purchase. But if we're finding ourselves in a situation where, hey, there's going to be 5 other offers and we know that some of these other offers are going to waive inspection, we want to try and be equitable and competitive in that scenario as well. So one of the big things that we do is we work to conduct what's called a pre-inspection. So in a pre-inspection, we're actually going to get an inspector over to the home to go through that same process of evaluating the home and giving you a verbal recap and assessment of the property prior to us actually crafting an offer on the home. Now, you might have something come up in that pre-inspection and you say, it's a game changer, it's a showstopper, we're not going to pursue this home anymore. Or you might have just a couple routine things that come up. Hey, some smoke detectors need to be replaced, a GFCI outlet needs to be replaced. Nothing that's significant, and we're going to continue to pursue this home, and we're going to waive our inspection because we've effectively already done it. There's also ways that we can get specific as opposed to just simply waiving our financial contingency altogether. We can set specific terms and expectations around what happens if, for example, there is a low appraisal on the home. So again, working with an agent who's competent in writing a strong contract, negotiating against competing offers is really, really important. Now, one more thing that we will touch on is escalation. So an escalation simply says, I'd like to make you an offer for X, but if there are competing offers, I'm willing to escalate up to Y. So to give you an example, you might pursue a home at $600,000, but be willing to escalate up to $650,000. When we draft a contract, we're setting the parameters around what that looks like. Hey, I would like to write you this offer at $600,000. I'm willing to go up to $650,000, and I'll do that in increments of $5,000, beating competing offer in increments of $5,000. So in the case of a competing offer that comes in at $615,000, you escalate to $620,000 and you win the home. People always ask, well, but couldn't the seller just say they got another offer and they're calling my escalation into effect? No, they can't. In the case of your escalation being called into effect, the seller is actually obligated to provide us a copy, a full copy of that competing offer so that we have that as a frame of reference. So setting yourself up for success with regards to crafting a compelling offer, knowing which levers to pull. It's not just price, it's not just contingencies. We're also talking about like closing time frames. There's a number of different tools that we have in the toolbox to make sure that our offer stands out in competition to others. Well, there are certainly more pieces to the puzzle than we're able to assemble in a short video like this. I do hope that this has been helpful to you. I do hope that it gives you a foundation for how to be successful in a competitive market. I would encourage you to reach out if you have questions about the area, questions about the housing market, questions about working together. Give me a call, shoot me a text, whatever is most convenient for you. And one last time, I encourage you to like and subscribe so that you can keep up on all the content that we're releasing about Bellingham, about the housing market, and everything going on in this area. I appreciate you taking the time to watch this video, and I look forward to seeing you again soon.